Hey, what's up, guys? I'm going to make a quick video just to kind of break down a few things so that you can better follow my trades and just kind of understand the language that I'm speaking, right? So what we're going to cover really quick is just drawing zones and then support and resistances, the entries, how you're going to enter, the importance of stop losses, risk to reward, diversification, staying nimble, and then also let's go ahead and do setting orders alerts. All right, really quick. So let's do zones. So supply and demand is essentially resistance. That's what it is, right? The difference is instead of it giving you a pinpoint accuracy of a price, it says that typically resistance or support will come into a range of a previous resistance or support. And that's just how it works. That's the concept of how it works. And it'll help you get better entries rather than, if you were to draw a support line here, right? If you draw a support line here and you took an entry here, then uh, your price would be higher than if you said, hey, you know what? There's actually a buy zone here that I would like to buy in, and then you just split up your buys into, segments of 3 or 4, and what that can do is just give you a better entry, and then also in the sense of resistance, it can give you a better exit, right? Like right now, I have target 2 for Tilray from $2.80 to $3. We trimmed 10% today at 280. It's at 307 in after hours. And realistically, we could trim another 10% because it's such a wide range, and that helped us get another 10%. So this is Ethereum, right? And this is the second cycle, right, from 2020 to 2021. And what I'm going to do is I'm going to break down some supply and demand zones as if from this cycle that can benefit us for this cycle, right? At least when it's in this range. So typically what I do is I like to go from the monthly to 2 weeks to 1 week to daily, 4 hour, etc. Right? I like to go top down as far as views. And how I draw supply and demands is I kind of draw them as if when I see dojis, right? Like this is a doji. I like this one. So if I was to draw this, right, I would essentially draw it here, and then that would be supply. Okay. Now over here, I don't see anything, so let's go to the 2 week. If you look at that. So even not only on the monthly was this supply, but this is also supply on the weekly, right there, right? So then let's say that's the top, and let me look for another doji style candle. That's kind of one, but you can kind of already see that it's sort of breaking down. But when we were like out of the bull market, you want to look at the lower, right? So you want to typically look under the 50% retracement. Like you don't want to buy anything that's above the 50% retracement. Often it's around 61% to 78%, right? So if I was to look for buy zones, I would do it in this range. And sometimes it can be really oversold, but it should be. And then let's look. And right here, right? So here's kind of 2. I like this one better. So then I would say that this is demand, right? So let's go and make this purple. And then right, demand. So now from this pivot, right? And what this would tell me is if we start breaking under this, then this becomes resistance. So then we're going even lower, the super bear thesis that people were thinking of with initial crypto. But so from this rally, we have a pivot low and a pivot high for the next rally. Okay, so let's go to the right. And here you go, right? So this is the bottom when everyone thought the world was ending, right? And this is also, let me explain bottom wicks. This is why you don't close the position unless there's like a daily candle close, or if it's, like realistically, I should have drawn this, that this isn't just a regular demand, this is a 2 week demand. And that makes a difference, right? Because if this is a 2 week demand, you can't really close the position until there's a weekly close under a weekly demand. Same thing with daily. With daily demand, you don't want to close the position unless it's a daily close under the daily demand. 4 hour, all that stuff, right? It's all relevant. And what you do see here is if we would have drawn this, and even though we were freaking out during the absolute low of this, you can see that this demand zone, this 2 week demand zone was respected and actually called the bottom of Ethereum, right? And even though we broke under it, you can not see any box of the candles close below the demand zone, right? The bottom wicks are okay because what this tells us is, right? This tells us that the buy demand is so strong that the price is spending very little time under 1,041, which causes the bottom wicks. So this tells us there's buy demand here. Everyone's stepping up to the plate, right? And what did that do? That gave us exactly what we needed, okay? That would have marked the bottom. And essentially, where are we at right now, right? In the supply zone. This is the previous high. Where did we initially reject? Exactly. This is where we're at, and if we were to sell off, and let's say, like I said, the end of the year rally, I would say this is the area that we're going to, right? So this is a 2-week demand. So Ethereum's right now is not one of our trade ideas because it's overextended. I don't see a lot of opportunity here right now. But if we get into this zone, then that would be a perfect entry in my opinion. And let's go ahead and look from this pivot low to this pivot high what the fib is. Where did I say is a good time to buy? Between the 60 and 61 and 78. Where is this demand zone? Between the 61 and 78. So I think this is a valid demand zone for Ethereum. And for this drop from here, it's 18% downside. But you also have to realize how wide is this zone? Okay? How wide is this zone? It's 22% wide. 22% wide. So let's use this as a trade idea, right? So I just taught you how to draw the supply and demand. And now let's plan a macro trade for Ethereum. This isn't a day trade. This is a multi-month swing, right? This is where, like, if you don't have an Ethereum trade, like, we can trade the daily zones and stuff like that, but you want to stay nimble. You don't want to full port it. You don't want to full size. But down here is where I would start sizing up drastically. So if this is a demand zone and it's 22% wide, well, what I would say is, very often, by the way, you have to be careful because sometimes it has so much demand that it only touches the top zone. But how I would typically do this is I would split this up into maybe 3 segments. And however much money I plan on allocating to this, I would do 30%, 30%, 30%. And then a daily, or in this case, a weekly close under this position would be a weekly close under this would invalidate this, right? And then, which then would justify and rationalize that more than likely somewhere down here is where the next one would be, right? And if you held from here all the way down to the next demand zone, that's another 27%. So let's say you bought all the way at the top of the zone and you hold all the way down here, 43% drawdown. You're losing half of your position. And then you got to realize 43% down is never 43% up. That's a 78% move to the upside. You have to nearly double your position from this bottom to make your money back, which is why it's important to scale in. It's also important to realize that when this demand, this support, if this breaks below this, now this is resistance, right? So even though we broke under this, you don't want to buy this position, or like if you're very long term, what I would say is like reduce your position by 50% or close it completely. It all depends on your risk profile and how long your view is on this, right? Because you also want to take into consideration year plus holds for 20% tax cap. But essentially, if we break under this, then this is now resistance. So then what's your risk to reward here, right? If this is now resistance, it's very unlikely you're going to get through resistance when you just broke below it. So you're looking at 28% upside for a 50% downside. That's a 1 to 2 ratio. That's terrible. You always want to go 3 to 1, 4 to 1, so that you can lose more than you win and still be profitable. This is a terrible setup. So once you break below this, that's off. The trade's invalidated. And if it breaks below a major demand zone like this, then it's a multi-month correction. So it's just going to be more churning. And this is always something that can happen because right now we're at a lower high. You always want to take that into consideration. Until we get higher highs, it's not a bull market, right? We're kind of in a bull market. I think we are. It's just Ethereum hasn't broke out yet. But in the long term, this is a definite buy zone that I would consider buying Ethereum at. And then what I would do is look on the smaller time frames for something better, right? So if I was to look here, let's see, let's go from up here down. I see one right here. So I think this is a daily demand zone. Okay. Okay. And I usually like to put these up here just so I can kind of see where the price is. And this would be another laydown, right? So if this is to be the case, now if you were to look on the upside, where would we be? So we've already hit this major resistance, right? And this is a weekly supply. But this is also, I don't like it when they're a little lopsided like this. But let's see if the 2-day gives, oh, look at that. That is beautiful. So now this is the new resistance zone. So essentially, we have a problem here. In the short term, we need to get over 4,089 just to get out of this risk zone. But then we're still not in the clear until we clear this. But the day we clear this, that's when you can be extremely confident that all 15 to 25% dips are getting bought. So then you just keep trimming at every major resistance, every cycle level, to be honest, right? Like sell 5,500, 6,000, and then any 15% drop, buy it. Because the trend will ultimately be to the upside, right? You want it like that, which is essentially what it is right now, right? If you did something like this, and this is typically how the zones work. Like, watch this. This is crazy. People act like this shit isn't algorithms, but we're essentially in this buying channel. And then sometimes when you break through this channel, it hits the top of this one. But so this is what we're looking at, right? So right now we're in between two ranges. Now, personally, you also have to look at this one. Like, here's another one. And the thing is as more and more of these build, this gets uglier for the bull thesis, right? Because this is just more consolidation and then lower lows. So we have to think of it like this, right? Sideways consolidation, bullish people bought, right? They bought, and now they're underwater, right? And what happens is dip buyers become pop sellers when we're making lower lows. Like, you bought up here, now you're just looking for a little bit of recovery of your lost money, and then you'll sell, right? So you were a dip buyer here, it breaks really low, you get scared, and now it's popping and you want to get out to break even. So realistically, what we're seeing right now is we're seeing a lot more supply building up on the upside than there is on the bottom side. The bottom side was literally just straight up. There's not a lot at all. But as this consolidation happens, it's overhead supply. Okay, so how this works is essentially like I would have up here. Once you start making lower lows, you're looking for some type of support. So now it needs to present itself some type of support. Nothing here. Let's go to the 4-hour. Let's not look over there yet. And as we go on the smaller time frames, they become a little bit weaker and untrustworthy. Okay, here we go. So this is the 2-hour time frame. This looks like demand to me. So 2-hour demand. Okay. Now I made a post earlier about 3,200 needing to hold. Mainly because this looks like a 5-wave structure down. 1, 2, 3, 4, 5, and this looks like an ABC. So if we trip this low, this is probably an ABC correction that looks like one of these. And typically wave C is the length of wave A. So let's just see if I even got that right. Yeah. So there you go. If we trip this low, most likely what would happen is this would be an ABC. We'd trip this low, we'd make a lower low. And then what typically happens is people panic sell because it made a lower low, right? But let's watch this. Then it falls into this demand. And then it starts rallying again, and everyone gets excited. They're like, "Oh wow, I got shaken out." So then they buy back in. They sell down here, then it rallies back above where they sold. They buy back in, even though what they don't realize is it made a lower low here. It's a lower high here. Then we trip this. So even though we made a lower low here and there's demand here, there's going to be an initial reaction where it's going to be respected. Then it's going to come up and find supply. Sorry, there we go. It's going to come down here, and it's going to come up, find supply, get rejected again, and then go down. And then each wave is a structure of 3 or 5. So this one is either a 5 or a 3 or 5. I can see 1, 2, 3, 4, 5, or you could be like A, B, C, which is 3. Now this one would be an A, B, C, which is exactly how it could play out. So if we trip this 2-hour demand, this 3060, it's an ABC correction, and we'll probably get that lower buy range buy, right? But until then, we have to play the chart, of course, and for all we know, this could be a wedge, right? So then we're wedging like this, and we're wedging like that. So as long as this 2-hour demand holds, we're okay, because then it's a higher low, right? If it's a higher low, then what this could be is a leading or an ending diagonal. If this is wave 5, which that's what I'm banking on. It could be an ending diagonal as in waves of 3. So then this would be a wave 1, this would be a wave 2, this would be a wave 3, this would be a wave 4, this would be a wave 5, right? And realistically, what I would look for is this would be actually a little bit bigger than we expect, break above this so it's a higher high, then we get some type of ABC correction that scares everyone, right? And then you buy this dip, and then it goes higher, and then we see 6,000, 7,000, or whatever. But that's supply and demand, and that's about pivot lows and pivot highs. You have to realize this is a strong pivot low because there's nothing else around it, right? So this is a definite representation of a pivot low. If there's ever going to be anyone to step in, it has to be here. If it's not here, then none of this is strong, right? There's not any pivot. The next real pivot is right here, right? That's pivot high, and this would be the concept of an SR flip, right? Once upon a time, this was resistance, right? Comes here, it bounces off of it. It tried to resist it, but the move was too strong, so it was a low pullback, and then it broke above. And then what happened here? Break above, back test, higher high. So this has already proved itself right here once, twice as a pivot high, as an SR flip. So if we got down here, I would look for this SR flip to hold. We break down here, we hit it, and then we hold it. If not, then it's somewhere in the middle. But the odds is it'd be around this 2700 area. So for Ethereum, this 2-hour demand zone has to hold. And if not, then we're looking at this lower low into this daily demand zone, which would ultimately tell us that pops are going to get sold. Lower low, right? Lower high, lower low, lower high, lower low, lower high, lower low. That's exactly how it has to happen. So what we have to do is we have to hold this pivot low and then break above this pivot high. And that's just for short term. We need to get above this pivot high, and we really need to get above that pivot high. When we get above all of those, that's when it's game on. Until then, we're fiddling in the middle, and everything's a little bit unsure. So that's demand zones and supply zones, right? And then your entries, right? You always want to break these up. You don't want to go heavy, especially if it's the difference between like a nibble zone and a buy zone. If I call it a nibble zone, it's because this is a soft support. Maybe you don't have a position at all. Maybe you sold some at the top and you're like, you know what? These are really good when the trend is up, when we're really bullish. When we're really bullish, they're really good. There'll be these quick drops and it'll pop, right? And when that happens, you get paid quick. And then you get really excited, kind of like what Nikola did yesterday, right? Went from 103, dropped 14%, instantly went back up 10%. So it dropped 13%, the buy entry hit, and then went back up 10%, all within like an hour. So And then same thing with trimming, right? Like let's say you're up here, and even though we're up here and you buy this dip because it's a good risk reward, like let's say with this nibble buy zone, right? This is how you would take this trade. Right now, we have to worry about this, but what I would do is I would look to enter in this buy zone, and I actually called it 3,200, and it hit 3,200 already. And what you would say is the trade is this, an hourly close under 30.60, and you would target this supply. And for this being even an intraday trade, you're looking at a 4.5% risk for a 7.5% upside. So it's like a 1.8 to 1, almost a 2 to 1, right? But if we got above this, let's say you trim 60% of it, but you have 40% left. Then what you would do is, I deleted this, but then you could hold the rest of the position for this next supply zone, right? And then that would be a 22% to 4.5%. Now you're looking at nearly a 5 to 1. You would have to get 4 trades wrong to beat this, to lose money taking these type of trades, right? But then you have to remember, if it broke below this, the next zone, the top of the next zone is 11% down, right? So if you buy this, right, and you actually buy it here, and you're down here, and you're down 4.7%, and then it starts to drop, and you're like, nah, I'll hold, I'll hold, I'll hold, I'll hold, I'll hold, I'll hold. Now you're at the top of the next buy zone, and you're down 15%, which is like a 20% upside. Now you got to make 20% back to break even. But then let's say we get in here deeper, 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 right? Now you're down so much money when you should have just cut it here because now this is resistance. Price action breaks under this. Now what happens is this becomes resistance. And what's likely going to happen is it's going to go hit supply and then go lower. So anytime it breaks below, you don't want to play the game. Just cut it, go for the next zone. Unless it does this. And, Litecoin did this like twice over the weekend. It was very annoying. But let's say it breaks below and then it gets back above it. All right. Now, even though that tricked us, the probability is, okay, that was a fake breakdown. Because now it got back above resistance. And now this is support, right? Now it goes back to purple. And now support. So then what happens? It goes back and then goes higher. And this is literally what Litecoin did here. So I had a zone drawn right here, right? And realistically, the next zone, like I had it for this consolidation and I wanted to be really secure, but realistically, it was this right here, this area, which is the next buy zone. And if we would have done it, then it would have hit, right? It would have hit it flawlessly. And then that was a 16% dildo candle. But I didn't. I was trying to be safe. Nobody had an entry position except like 2 or 3 guys. And I'd rather play it safe. But anyways, we were here. Broke down, went all the way down here. What does it do? It breaks back above. Then it starts playing games and it breaks down again. It's like sometimes when you're in the sideways consolidation, it feels a little toppy, and it does that to you. And then what it's doing right now is the $97 to $100 range that I was calling, and it's right here. You can see that. This is a 2-hour demand zone where we're currently bottoming and curling up right at the bottom of this, right? So I said, if this holds, then we could possibly go to new highs, right? And I think it might happen. I mean, it's currently trying, right? We're getting the reaction that we need, right? This is a 2-hour candle. We just broke just a slither, a newer high. This is a bullish candle. This is a bullish candle. These are bottom wicks. That shows a lot of buying demand. Okay, so we did drawing zones, support, resistances, entries. I did say stop losses a little bit, but I'll just cover it again. You know, Riot, let's do Riot. So Riot's next buy zone is 960 to 1006 for the bullish thesis. You know, this has to be, in my opinion, right? There's a risk of this being wave 5 and this being an ABC correction, and we go down to $7. There is. There really is. And that's, you know, another 40% downside. But my current thesis is this, that I see this as a 5-wave structure of wave 1, right? Now this is wave 2, this is wave 3, and when with wave 3, it's really big, right? So then it's the extended wave 3, and usually in the third wave, you can see like large degree waves. So what I'm hoping for, right, is this, that this massive wave 3, and this is what we see. I'm hoping that's a wave 1, right? So then this is, and this is like wave 1, wave 2 of wave 3. We go up here, wave 4. I gotta bite the mouse. Wave 2, wave 3, wave 4, wave 5. And that's how the inside structure of wave 3 should look, right? So this is the count I'm currently betting on. What would invalidate this, right? What would invalidate this, that this is not a wave 1 and this is not a wave 2, is if we get a daily close under 960, right? The rule is wave 2 cannot exceed past 100% of wave 1, which means it cannot go under it. If it goes under it, this is not a wave 1. If this is not a wave 1, what I think we are looking at is this was wave 1, 2, 3, 4, 5, and this is an ugly ass, massive ABC correction, right? Where this is an ABC, ABC, and then this is an ABC, right? That could be the case. I don't think so, but I mean, we're getting there. I mean, realistically, I want to say I don't think so, but this is not the way I want to see an ABC structure. But that's what the case is. So with stop losses is, this is why you want to stay nimble. So this was a nimble buy zone. This is the actual buy zone. So this is like, I don't have any position. Let me buy a little bit, right? If my allocation is $5,000, let me put $1,000 in it right here, right? And then you put $4,000 in this buy zone. And then what that would do is that would lower your cost basis, which could have been up here. It would put it somewhere like around 1030, right? If you bought it down here, which would give you a lower entry base. But if it has a daily close under 960, then the bullish thesis is invalid to me, right? It really would be. I mean, there is a case where maybe this is A, B, C, and then we don't really trip under this 859, but that's a risk factor, right? And I mean, my thesis is this, so I'm going to stick to this and hope that I'm right, and hopefully that we get this massive rally coming in the next 3 days. All right, so that's stop losses. What else we got? Risk to reward. You know, I mean, you have to always shoot for 3 to 4 to 5 plus to 1, right? If you have a 4 to 1 risk to reward, that means you would have to get 3 trades wrong on average per 1 win to break even. That means you could have a 30 or 25% win rate and still break even. If you win 2, you're winning, you're profitable, right? So the better the risk to reward, the better the outcome and the probability that you're going to succeed as a trader. And that is nothing more than exercising patience. It really is. So what you do, and that's why I post so many trades, right? Like we have 15 trade ideas. And somebody was like, just give me, multiple people have asked me, be like, just give me your top 3, give me your top 4. I'm like, that's not how it works, right? You know, each sector, each stock will hit the resistances at different times. So, you know, let's say Ethereum was rallying, right? And Ethereum rallied and it hit this right here, this resistance. So then you would trim Ethereum. And then let's say weed, which had not rallied yet, was in a demand zone, right? Instead of you not selling or trying to buy something overextended, which has a very poor risk to reward, right? It's like you're in supply right here. So your reward is minimal versus a major risk of a retracement. But then you have something like Tilray, which was in demand zone, right? With a risk of like 4% for an opportunity of 40%. So it's about cycling risk to reward ratios. And the only way you're going to do that is by trimming when I say trim, and then setting buy alerts, right? Set of buy alerts or buy orders, right? If you see these buy zones and it's not a nimble buy zone, go ahead and preset orders all the way through, good till canceled. And then if it goes in it, it buys it. So all you have to do is monitor and stay with your alerts and orders, right? I'm giving you all the data. All you have to do is put in the orders and the alerts. And if you do that, this is easy, man. It really is. All you got to do is just cycle the risk to reward ratios by buying everything that I say to buy when it says to buy, and then trimming or selling everything I say to sell when it says sell. There's a reason I'm saying sell. Even though you want it to moon, it's about getting profitable first, right? Get profitable, then play. And if you get profitable, then it becomes a lot easier. Then you have more money to play with too, right? But this whole, I'm going to hold it till it moons, all this crap, no. Let's not play that game. You got to play safe. You got to play safe and make money. And then it's about the long game, right? If this is a bull market, it's going to be 2 years plus, right? But the drawdowns can be 40, 50%. And if you're coming in and this is the top, right? If this was the top, right, of Riot and all these other ones, you're going to literally buy in. You're going to get overconfident. You're going to put in too much in my buy orders, and then it's going to break, and then there's a 40% drawdown. And then your portfolio is going to be down 25% initially, which is then going to hurt your confidence and all this other stuff. But then if this does happen, then we'll get our entries later on in the year. But you have to kind of get in the profit, get comfortable, make some money, and until then, be a little safe. All right, so diversifying. Like I said, I really think weed is going into its bull market. Most people do not know this, but the FDA, the Food Drug Administration, descheduled marijuana as a controlled substance, which is why it is illegal federally. It is no longer, now the federal government no longer has a rational reason to keep it illegal, because the reason they had it illegal was because it was a controlled substance, right? It's no longer that. So the FDA has already descheduled it, reduced it, and now it's being pushed through the system, through the court, for it to be legalized on a federal level. Now, let me explain to you something that you might not know as well. With marijuana companies, with marijuana being illegal federally, marijuana companies are not allowed to use banks. They're not able to put their money into banks. They're not able to borrow money from the banks. So they're borrowing money from private institutions that have an extremely high interest rate. So their debt, the risk that they take on, is extremely high, which is why marijuana companies for years have not been able to be profitable. Because in order for them to expand, they have to borrow money, and then the money is too expensive to borrow. So as soon as this becomes legalized, it's going to be all over the news. Everyone's going to be excited, right? It's going to get so much sentiment, right? It's going to be the alignment of technicals, fundamentals, the fundamentals changing from the federal level being legalized to sentiment. Everyone's like, oh my God, bull market, right? And then everyone chases, which is already what's happening, to be honest. People are starting to catch on. Weeds stocks are up way more than fucking miners and crypto and everything else in the past 2-3 weeks. Some of these are up 300, 400%. This is why it's important to diversify. And I think China is about to enter its bull market. So then you have, and we got to be cognizant, right? That crypto has already rallied a lot from their lows, right? Right? Ethereum's up 300%. Mara went from $7 to, was it 38? 33? A low of 3, right? People were like, oh, crypto. 30 up 800%, right? Let's go weed, right? Tilray is up 92%. You guys, we're early. We're early. CGC, that just popped off. It's up a couple 100%, I think, already. 280%. Tilray's lagging, right? ACB, 158%. These have rallied nowhere near the wave one of the miners of the crypto, and it's just now starting. I think we're entering it. Like this, what this is this is smart money already knowing what's about to happen. So they're already going to get in. Then what's going to happen is it'll probably be legalized. It'll be like a sell the the rumor, just like Bitcoin ETFs. They'll fucking slam it, scare everyone out, shake everyone out, consolidate a little more, and then it'll literally just won't look back for the next 2 years. That's truly what I think is going to happen, right? So then you have Chinese stocks, right? Look how oversold these are. Literally through a whole cycle, insane. Right? I can see a 1, 2, 3, 4, 5. And then this is a whole B wave, and then this is another one. Like I really think this is bottomed. It's just like we're literally at these type of lows, starting to wedge. Like look at Baba. Baba has literally 20x the revenue since the 2016. They make 20 times more money. Because 5 billion, 30 billion. Sorry, 6x. I apologize, numbers wrong. But 6x more money than they made back here. And this is just suppressed. This is compression. By the way, this is a 1, 2, 1, 2, 3, 4, 5. This is a massive accumulation phase. When this goes, it's gone. All right. Like first spot is this probably this gap fill at 160, which is 120% movement. Now, given this isn't going to give the kind of gains of the more risky ones, but this is a safe bet. So, it's not, you don't want to just all in crypto, right? Especially when everything else looks like it's going to rally too. Like weed is so suppressed, right? Tilray's $3. Like look how many times, look how high it's been, right? This is just 2021. This is the euphoria in 2021 went up to $65 a share, right? They make more money, and then the company, the sentiment, everything will be way higher, right? As it gets legalized. But the upside value here, like I really think within the next 2 years, it'll be $15 a share, right? That's massive. $3 to $15 in the next 2 years. That's why you need to diversify because they're all going to go through their own cycles, right? Like for the last month, crypto has been chopping sideways to down, right? Miners are down 40%. What's weed at? Fucking Tilray, Sundial, ACB. Look at these 40% today, 30% today, 22% today, right? What do we got about Tilray? 25, 23% today, right? And then we're sitting here with fucking Mara and all these down. That's why you got to diversify. And then I'm telling you, Baba, Neo, all of these are coiling. They're about to fucking rocket. I also went over staying nimble. You need to get in the money, right? You need to get in the money until I get the confirmation that we're in the uptrend, right? The bull market's going to continue. But right now we're looking to kind of toppish in the broader market, right? I gave that warning last Friday and it's played out to a T, right? Even I bought too early, essentially, right? With Mara, I got in the nibble zone. I refilled my 10% I sold in the nibble zone, and now we're under it. So that's why it's important to stay nimble, especially if you don't or have not made money yet this year or with me. And then the setting orders and alerts, man. All the work is done for you. You have to set the orders. You have to set the alerts. If you do not set your orders, right? Like if you don't set your order down here, what's going to happen is by the time I get to say, buy zone triggered, what's most likely going to happen is it's going to have like an instant response. Then it's going to be up like 4%, 5%. You're going to be like, oh, wow, it hit. And then you're going to buy like up here. And so you didn't even get in the buy zone. You didn't buy in the buy zone. You bought it 6% above the buy zone. And then let's say that initial reaction wasn't even the right one. So then we go deeper in it. So now you're down 12% for the next buy zone or for the next entry when you could have been down, 8%. So it's a lot better to set these targets, set the trims, and you don't need, this is probably one of the best things I can say. You do not need the entire move. You just need the meat of it. You don't need the entire move, right? If the stock goes 35% and we get 22%, that's a great trade, right? It's hard to time the top. It's hard to time the bottom. All we have to do is we have to make the most educated guesses and uh, plan that we can possibly do and just stick by it, right? Based on the information I have, where do I think the price is going to go? What do I think it's going to do? So I do this, I plan it out, and then we just adhere to it. We don't get there, right? We don't get up here and be like, oh my God, everyone on Twitter's talking shit. On Instagram, everyone's saying it's going to moon, and then you fucking add up here, and then you're fucking down 15%, right? Like, don't do that, right? The time to buy is in the blue zones or the purple zones. The time to buy is when you're scared shitless. Every time, most times, when you are scared and you think it's going to go down really bad and it's already down really bad, you're near the bottom, right? So be patient. Never buy on a green day. Only buy when the market's ugly. And if you do this, right, at first you're going to feel like you're doing it wrong. But if you're patient, you might miss like the first few, but eventually you're going to be patient enough to where it's going to be a really nasty day and you're going to get really fucking amazing entries and you're going to be happy as fuck. Like realistically, like if this is the bottom for the mid-year rally, we have so many entries. Like we've gotten 75% of our active trades, entries on our, we've gotten entries on 75% of our active trades. If we rally here, sayonara. Like everyone's account is up handsomely, right? Like, crypto wasn't doing that good today, but that's not to say everything else wasn't, right? We had, I see the bullishness in China. I see the bullishness in Lucid. On top of that, ARK, Tesla, PayPal, Luckin, BitF, SoFi, Tilray, all of these were green, right? So if you're diversified, even though your crypto portfolio is red, maybe these kept you up today, right? Like one of my accounts is up $6,500 today, even though I have a lot of crypto, right? But from where I'm diversified, it's still a green day for me. So what's going to happen is these are going to overextend, right? Like let's say I realistically should have trimmed Tilray at 308 earlier. What are we at? 303. I should probably trim it again. And then what do? I take this money of an overextended stock that I've had since like $1.80. That's that's up 62%. And then I trim here, that's up 62% because the risk is here, right? It's like, am I really going to get over this? Or is it going to pull the fuck back all the way down to 220 and I'm down 25%? So I'm up 62% here. And then what do? Right? I go and I put a buy order in Riot, right? I put a buy order in Riot at like 1006 and then 976, right? So I trim Tilray and I go put these buy orders in. If I do that, where's my reward, right? If this is to have a bullish thesis, right? Way higher than the current movement of Tilray. Now, given that might be a poor reference because Chinese stocks or weed stocks might rally really hard into Friday, to be honest. But on average, 9 times out of 10, that's how it's going to work. All right, I think I covered everything. All right, hopefully that helped. Take this shit serious, man. You got to get this shit down. You got to have your orders, right? You got to stay nimble. Let's make you some money before you get too crazy, right? Be more comfortable with adding heavy in weekly demand zones than daily demand zones, right? And the nibble buy zones, it's like 10%, 15% of what you would want to buy. It's a nibble. Don't even put 25% in. It's a nibble, right? The daily demand zones, 25%, 30%, maybe 40%. But save your capital for these oversold conditions where we get in a fucking weekly buy zone. If we get into the weekly buy zones like this one, like if you want to be a buyer at Ethereum, don't buy here at 3,000. Wait for it to get into the 2,100 to 2,700 range. Then you start buying heavy. Because it's very unlikely we get under this 2,080. I really don't think that happens. Let me look at something really, don't have it on this chart. But yeah, very unlikely we get under this. But if we get to this is a buy, right? So hopefully this helps you guys. Hopefully you're able to maintain through it the entire time. If you have questions, DM me. And make sure you guys learn on your own too, man. Learn candlesticks, learn the supply and demand. Get on a chart and draw this shit, right? Get on a chart and draw this stuff. Delete or take down the active trades and try to draw them yourself and see if you come to the same conclusion as me. Because if you do, then you're going to get better. Then you'll learn how to do this. And if you know what I'm talking about when I talk, then you're going to become a better trader. Especially when you start coming up with your own trades. And if I give you confirmation bias. It's like you have a trade idea, and then all of a sudden I post it. Oh man, it'll cause you to put so heavy in, right? Because you have so much confidence because both of us are aligning with our thoughts. But anyways, there you go. Ciao.